Hi everyone, welcome to this live coverage. I'm here with Yohay from Forex Crunch and Mauricio from FXStreet, and we are going to cover live the last revision of the US third quarter GDP. How are you guys? Welcome. Nice to see you.
Valeria, doing great. Yeah, it's I think the last important figures for the year, no?
Yeah, I do believe so. We have also durable goods orders, which I do believe will be more relevant today than the GDP revision if we have not big changes in there. We have also personal consumption, personal spending, jobless claims. So hopefully it's going to be a bit interesting. We also have data from Canada. I'm seeing inflation, retail sales. So there's a good bunch coming in 15 minutes or so.
Yeah. Yeah, as you said, GDP, of course, is our headline. It's expected to rise from 3.2 to 3.3, but and this makes sense. Usually, the last revision, we don't see big changes. And if this is indeed the case, the focus is on on durable goods orders, and it's important to focus on core orders, more important than the headline figures, which can be quite volatile. And if we have if we do have a big surprise in GDP, of course, matters more. Jobless
Yeah,
claims in the past few weeks, months, has been very stable. So,
yeah. And at record lows, right? Levels last seen in, I don't know, 1970 or so.
yeah,
So nothing to worry about there.
not there, no.
There, no. Anyway, the market is quiet, quiet, quiet. We are heading into, we are already, I do believe, in summer vacations. So market is not showing much action these days. Volumes are ultra thin, right, guys? So don't expect the movements to last long. Usually, when we have this kind of days, we see sharp reactions like yesterday when the euro jumped like 30 pips in a few minutes and then nothing. Stabilized within a 20 pips range for 10 hours or so. So that's probably what we'll see today and the rest of the week and the next one, right, Yohai?
Yeah, thin liquidity. You might have some last minute adjustments.
Yeah.
Portfolio managers that have to hold a certain amount of stocks of one country or currency or cash or bonds making last minute adjustments. But in many cases, they already begin these adjustments before the deadline. They don't wait until the very last minute. So let's see. Do you remember what we had last year? Was it quiet? Was it crazy?
It was quiet,
Yeah,
extremely quiet.
yeah.
We
Then
have
in
some,
January,
yeah, early January, we have some wild movements,
right?
which were wilder because of the previous tight rate we were having, right?
Yeah,
Anyway, I was thinking that maybe um, the bad numbers today in the US will be a good excuse for dollar longs to take some profits out of the table, right? Ahead of what you
makes
have
sense.
said. So maybe, just maybe, that at the point, right, we can see some interesting dollar selling across the board. So I don't believe it will affect the dominant trend. I mean, it won't be reversed to call. It won't be enough, sorry, to call for a reversal in euro or the pound or the Aussie or the yen or anything, right?
Yeah, can in many cases, news releases just provide an excuse to make a move, even if the data is irrelevant. I mean, even if everything comes as expected, and yeah, we see the dollar strengthening quite a lot. And for today, it's quite mixed. I mean, I see euro dollar rising just a bit, but the pound is dropping just a bit. Um,
The
Dollar
Aussie,
CAD will be interesting. Sorry. Yeah.
yeah, no, go on. I was saying that the
Uh,
Aussie is at fresh lows. Canadian dollar is also at fresh lows.
yeah. So
As
maybe
I said,
commodity currencies. Yeah. Sorry.
no, no, sorry, you go on, go on. I want to
Uh,
interrupt you.
I think we had sort of the beginning of the reaction to the Fed. The Fed is still the big theme here. Over a week after the event, we had euro and the yen. I mean, breaking new ground, especially euro dollar 14-year lows. And now I think this week we're seeing sort of a second wave of dollar strength with commodity currencies suffering a bit more.
Yeah, it's kind of mixed market. I have the Aussie pressuring the 61.8% retracement of this year early rally between January and April, May at 72.10 when we were standing right now. So I do believe that we have room for further falls in commodity currencies. Oil is with the surprise rise in stocks, and therefore that's putting Canada pressure also.
Yeah. Oil prices are getting closer to that 52 levels. This 52 level, this kind of double top. It reached a top of 54.50 almost, and then dropped back down and trying to, for me, still hesitating the price of oil.
Yeah, still, if you take a look at larger time frames in oil, you will see, let me change it to weekly, for example, that there was a sort of a top around 52, right? Where we are now standing, and it's a major support area, not exactly the level 51, 52. So as long as that level holds, the downward potential will look limited for me. But if we break through, I don't know, 150, then of course the round figure, that will probably confirm further slides ahead.
Yeah. The rise of oil is, of course, related to that OPEC agreement on November 30th. And the agreement talks about cutting production from January 1st, from January. So January is just, behind the corner. And so far, production, of course, has risen before the freeze. But Saudi Arabia and other countries did make noises that they're very serious in implementing the deal. We'll have to wait and see. Of course, in the past, they haven't always respected the agreements. So I think markets are also a bit hesitant.
Yeah, let's see what we get. I was reading that the market is oil market mostly is not a full believer in OPEC promises because they don't tend to keep them. But well, maybe this time is different. Anyway, what are your levels for the euro now? What are the levels you're watching?
104.60, which was the low back in March 2015. I think it's still resistance. We had, after the big fall last Thursday, we did see it, the pair move above this level, but I see this as a false break above that 105.20, which was the low, if I'm not mistaken, December last year. And to the downside, I found a line from 2002, 103.40.
Okay.
But maybe a better line is a more updated one from this week, actually. So that would be 103.50. And what levels are you watching?
Pretty much the same for 60. It's critical support. Last year low. We have Friday's high around 480. So that region in between 460 and 480 seems to be, for me, the roof for today, right? If we break above it, then the recovery can go a bit higher, 520, 540, maybe, but not much more. I'm actually not seeing the pair returning to 600 today unless we have huge disappointments, really huge disappointments for all the numbers we are going to read. And I've been waiting for a break below 400 for the pair to retest the lows at 350. Below that level, the next one I have at sight is July 2002 monthly high, which came at
150.
200, 205 or 206, 200.
Oh, okay.
So a break below the low will probably expose that level.
Yeah. I think the euro dollar has a real chance on parity, but the window is limited. I think in January, if we have, again, higher expectations from Trump to do all this fiscal stimulus, cutting taxes and well, spending the cash that the United States doesn't have, that could push the dollar higher and maybe euro dollar towards parity. But I think the window is relatively limited.
Yeah, I totally agree with you on that.
Yeah.
If we don't get parity soon enough, there's a good chance the bear may bounce. Not talking about to one bounce to 120, right? But indeed, parity will be a huge sun in the line for line in the sun. Sorry, for many, for many. Still, I believe that at this point the markets has overreacted in there. But you know what my main concern is over the euro? It's political woes for 2017,
Right.
thinking of Brexit. I know we are not talking about Greece these days, but Greece is again in trouble and fighting with their creditors, and the IMF is not willing to give much more money to the country, and the country is suffering a Christmas bonus, and oh my, Greece is back there. It's like a ticking bomb in the background.
Yeah.
It's not. I read yesterday that the Italian Parliament approved the rescue of local banks. Right? If I'm not wrong, they were talking about 20 billion euros. Right? Of course, most of that will go for Monte di Paci, and but there are a couple of banks that they are attempting to save. And the fact is that the euro area rules forbid the government to do that. So they are challenging the area rules, right?
The rules can be changed. Well,
Yeah,
we know that.
yeah, of course. But I mean, how much will you trust in an union that does not respect itself's rules, right? Meaning, there's a lot going on in Europe
Yeah.
politically, and well, that is the big hurdle the euro will have to face next year. It's not
Yeah.
just about dollar strength; it could be also about uh, disintegrating Europe, right?
Yeah. The biggest event that I see is the elections in France.
Yeah,
Presidential elections April 23rd and May 7th, but also watch out for elections in the Netherlands in March and around October in Germany.
yeah. You also I forget elections are also critical.
Yeah, and with the tragic attack in Berlin this week, uh, well, 12 people were killed in a Christmas market. Um, by I don't know if the suspect is a refugee or not, but it doesn't matter too much for some politicians. So some think it could endanger Merkel's stance. She recently decided to run once again, and she's seen as a symbol of stability in Europe. We can argue if this is good stability or bad stability, but um, and and these kind of stories, of course, these kind of tragic events, of course, help uh, populists such as, well, Alternative for Deutschland and also Marine Le Pen in France. So lots
Yeah,
of uncertainty.
yeah. It's going to be an entertainment year.
Yeah,
Okay, 1 minute to go, guys. Remember, we have a bit of a delay in here. We'll see the reaction first in the market, and then hear our comments about this. Okay, there's a couple of questions. Says, what do you think about the euro? I guess we have just discussed it, and the average short target is 375 and 350. Well, jarting for such a short term ahead of a big announcement maybe not be wise or more possible. Hopefully, if the reports are positive, you will get out of your trade quick, right?
yeah.
Okay,
And
here we are.
3.5, better than expected headline number. Not a huge surprise,
No,
but good news from the United States. Now let's see the other numbers.
jobless claims are much higher to 75,
Yeah.
but price in there, but not terrible.
Yeah, durable goods orders, headline minus 4.6. It's a bit better than minus 4.7 expected. Small
Yeah,
upwards revision. Core order 0.5 instead of 0.2. Also with an upwards revision, I think the data is okay.
yeah. Okay, the dollar Japanese yen is reacting, and the euro also. The Japanese yen is back towards 18 pound breaking lower. We have
Yeah.
the pound low of 12, 23.12 this week. So yes, that's the level. But 23.30 region where it appears right now and has been starting its decline for most of this week has been a huge resistance back in October on early November. So it's a tough area in where we stand right now with the pound. Same goes for the dollar Japanese yen. It seems that despite the bullish trend remains in place, the 18 level is a tough bone to break right now with not much of a trigger.
Yeah. So we're seeing a slightly stronger dollar as a reaction to the good news from the US. The
Yeah,
moves are not huge. The surprise is also, oh no, euro dollar now is up again. Well,
yeah, it's unable. The euro is refusing to give up.
yeah. One thing, I mean, that you learn in Forex 101 is that currencies also move on exports and imports, right? And
Yeah,
the Eurozone has a huge trade surplus, while the United States has quite a significant trade
deficit.
deficit.
Yeah,
So when we have zero speculation, which is not most of the time because
yeah.
it's a lot about speculation, we have these trade deficits or surpluses making a difference. That means there is natural, if you wish, demand for the euro against the dollar. So
Yeah, there's sort of a short term, really short term floor in the euro dollar around 420.
hmm,
Um, and that's the level it needs to break to see some follow through towards downside right now.
yeah, that today's low is 104.23, at least on my chart here.
Yesterday, something like that,
Hmm.
19, I believe it was. So no big reactions to the market, despite that the data was generally positive. The final revision, you said it was a slightly higher, right? Yeah, 3.5 from 3.2 initial estimate and 3.3 expected. So
Yeah, durable goods orders, excluding defense and air, sort of
yeah,
the core figure is plus 0.9 instead of 0.3 expected. So that's also good news.
yeah, yeah. The two main reports, GDP and durable goods, are positive. The market is tired. Everyone's on holidays already.
Yeah,
Okay, let's buy some greenback, but that's it.
yeah, but don't take it too seriously.
Yeah, one outperforming it's the dollar against the Canadian dollar today. The underperforming is the Canadian one, which is
Let's see the data from
even
Canada.
yeah, 2 weeks high or so and
Uh,
counting.
all the data in Canada missed expectations. So
Yeah,
um, core CPI minus
ugly,
0.5 instead of,
yeah.
sorry?
Ugly inflation in Canada. Yeah,
Yeah. So year over year, core CPI 1.5 instead of 1.8, headline CPI 1.2 instead of 1.4 year over year. Oh, wait, but retail sales actually beat expectations 1.1
yeah,
and 1.4. So looks like CPI has the upper hand in Canada. So dollar CAD is getting closer to 135.
yeah, yeah. As expected, the market reaction was limited due to the low volumes we are having in the market. Not expecting us to go much more today, not next week, to be honest. Uh,
Yeah. We can forgive markets for low volatility at this time of the year.
yeah, low volatility, low volume, low everything. Well, here we are. Stocks are doing relatively well to the news. US stocks are modestly higher, but pretty much nothing to say or see in here. US market will are due to an early close on tomorrow. I'm not sure.
I don't know. Maybe Mauricio knows.
I do believe Europe is it's on an early close and will be European markets will be down on Monday because of Christmas coming in on the Sunday. But I'm not sure if Wall Street will close earlier tomorrow. I will check.
Yeah. In the meantime, euro dollar, well, recovering, moving back up. Was the first to bounce back. Pound dollar also, well, basically balanced. And dollar yen still sees a positive reaction to the better than expected US data, better than expected data in durable goods orders, and GDP. A miss on jobless claims, but it's mostly positive. Canadian dollar lower also on weak inflation figures from Canada. Aussie actually a bit higher, Kiwi a bit higher as well. No huge moves today.
The dollar Japanese yen retreat fast after flirting with 18.
Yeah, it's almost back to being balanced.
Yeah.
In the aftermath of the data. Within the GDP details in the United States, personal consumption is up 3% annualized, according to the final read. Core PCE, no surprises, 1.7. Corporate profits, 6.7. Final sales, 3%. So, in a way, sorry.
Seems good. I was checking, and Mauricio is telling me that we are not due to an early close on Friday, but it will remain closed on Monday also. So we are having no activity on Monday. Mm, just a bit of action in Asia, I believe.
Yeah, it's Boxing Day in the United States, and well, in the UK at least. And here in Spain, it's San Esteban. It's a holiday here in Catalonia. 26th.
Okay, pretty disappointing market reaction. Gold is higher. Quite interesting. Okay, yes. There are more reports coming in an hour and a half. But that's it. And I do believe that not much is going on here, nor will happen, right? You erase everything, pound dollar is there, also. It's clear that the Japanese yen and the Canadian dollar are among the weakest today, and that euro shorts are sidelined today. They're not willing to participate. As I said, I do believe the market is waiting for an excuse.
Yeah, mixed.
Yeah, market is needing an excuse. Take profits out of the table, and the data failed to give it. Someone's asking about the possible, sorry, no, wrong charts. A possible height for the dollar, the dollar Canadian, the Canadian dollar. I would say that 135 is critical, right? Because it's psychological level. If somehow we go through that level, we can go towards this highs we have in the 35.40 region from late November. But remember, the volumes are low, so don't expect much for the market today. It's holidays trading. I know it's boring, it's uneventful, it's almost sad, but well, it's what it is. We have a
Yeah,
couple of weeks to rethink our strategies, to learn something new,
get some rest.
get some rest also, yeah.
Yeah, it's a bit of an anticlimax to last week. Last week we had the Fed decision, highly anticipated move. I mean, and beforehand the ECB. So
Yeah, it really has been a quite nice December considering that we have the ECB and the Fed in the first 2 weeks of the month because usually it's not the most interesting month of the year.
yeah, but the Fed chose it 2 years in a row to raise rates, so it made December interesting once again. So
Yeah, I was thinking about that. They announced tapering or stop
all
quantitative
right.
easing October or November 2014, right? And they
No, they announced tapering in December 2013. It was still
yeah,
Ben Bernanke, and they finished tapering in October
October
2014.
yeah, yeah. And it took them 2 years to deliver two rate hikes. I was just thinking, right, and thinking out. I'm thinking out loud now. When we have rate movements almost in every country every month, back in 2003, 2004, 2005, those years, those glorious years when central bank meeting was going to be a surprise, and we have rate hikes and cuts and hikes and moves, and all of a sudden we got into a 10-year spiral of nothing.
Yeah, mostly unchanged as expected. Unchanged as expected once again.
Yeah,
Yeah,
so the market remained focused on central banks, on
right.
what they said and whatever they hint. We stopped trading what we got and start trading what we thought we may got in the future.
Yeah,
Yeah, hints close. Those are market's favorites words these days, or at least
yeah,
during many years. Anyway, I guess we are getting ready for change. Maybe the market will stop focusing on central bank, and as we discussed at the beginning of this live coverage, we'll probably start focusing on political, on
yeah.
policy. Yes.
Yeah, I think 2016 has already seen some kind of a shift towards politics, and maybe 2017 we'll see a bigger shift, especially if consider the Fed is more dependent now on fiscal policy than in the past. So if Trump really does what he promises, we'll have more rate hikes, and the U.S. government will lead, and the Fed will follow. Uh, and if they do the opposite, then well, they'll still lead. So we'll see.
The dollar yen and dollar CAD and attempting back higher, CAD pressuring that 35 figure, pound also lower, gold quickly back down. I guess that this is what's dragging a bit. The euro, the lower, but the euro will is refusing to give up.
Yeah,
So
still up.
yeah, keep an eye on 420, guys.
Yeah. So we have some kind of a second wind of US dollar buying, but again, moves are quite limited. So
Okay, there it goes. CAD and yen. Looking more interesting right now.
yeah, dollar CAD touched 135.
Yeah. Stocks are flat, not doing much. Yes, futures holding there. Okay, so CAD is recommended from now on, guys. We have a bit more data coming out and then nothing. So take a time to think. Fresh highs in dollar Japanese yen. There we go.
Yep. 117.85, the high so far. So
Oil is going against the, the, the crowd and a bit higher, supporting the case for the idea that the market is willing to buy around 52, which was previous high and now seems to be a bottom, a possible bottom, psychological bottom. I would really like to see pound breaking below 123 today.
yeah,
That will put things more interesting.
yeah, 123 supported the pair more than once, right?
Yeah.
Yeah, back in November.
If the pair takes that 123 with some strength, I can see the pair going down to 120, 121, that region. 2088 seems for me the next bearish target.
Yep. Wait.
What was that?
Today, later on, we have a Fed's favorite inflation figure, the core PCE price index, but it doesn't move too much. Together with personal spending and personal income. Tomorrow, we have the final GDP from the United Kingdom and GDP from Canada, and also new home sales and revised consumer sentiment. But these figures will we'll find markets which are quite empty. So
Yeah. Someone's asking what's the best price for GPs to sell it, sir. So I guess it's for you.
sure. Uh, well, I'm looking at 123.80 because it was support in the past and near past this month. I mean, as the first line of resistance, and then I guess 125. Yeah, 125. It's a round number, and it worked sort of as resistance here. What lines are you looking at, Valeria?
uh, right now 23.12.10, which is the weekly low. I do
Okay,
see
that's
that
it.
the level the pair can give us some 30, 40 pips, not because of there's major support. I do believe that the next support is around 22.50, but because of low volume and slow mo, whereas the United States, I'm not willing to grab that much, but at least the pair will probably settle below 123 if it breaks these lows.
Yeah. Okay.
Okay, the euro woke up, the euro dollar woke up, and we're at fresh lows after the report, still above 420.
Yeah, let's see if it can break the low of the day, 104.23.
Yeah, that 20 level in our way.
Mhm. So a second wave of US dollar buying pushes euro dollar, pound dollar lower, dollar yen higher.
It's the year of the dollar coming.
Well, another
Mm,
year of the dollar?
another year of the dollar, yeah.
Mm.
Is there
My bet, sorry?
is there any year that won't be the year of the dollar?
Still the number one currency, but
Yeah.
it had some terrible years as well. So dollar CAD broke above 135, reaching new highs. I think in 2017 we'll have strong start for the US dollar, and then maybe a retreat in the second quarter, and then who knows?
Yeah, who knows? There are so many things that are out of our sight at this time.
Yeah. If Francois Fillon, center-right candidate, wins the presidency in France, and Donald Trump doesn't do anything too crazy, maybe we'll begin seeing headlines like peak populism, populism is so 2016, and things like that. But who knows? Maybe the trend will continue with Marine Le Pen winning the presidency, and
It's funny because everyone thinks the same if Donald Trump does not do something too wild, too crazy. We are all, we don't have faith in poor Donald.
yeah,
Anyway, if he does something wild, it would be quite interesting for markets also. So we have nothing to complain about because at the end
yeah,
it will represent a lot of activity for all of us.
yeah. There's always an upside.
Okay, I do believe that we can wrap up this.
Sure.
What do you?
Yeah, I think we're
Okay, you go. Come on.
okay. Well, mostly better than expected figures in the United States. GDP came out at 3.5 instead of 3.3 expected, an upgrade in the final read for Q3. Also, durable goods orders came out better than expected, including the core figures, small upwards revisions, and only jobless claims missed with 275,000. All in all, better than expected data is the bottom line. And we were seeing the dollar rise. We've seen the first wave of dollar strength, a retreat, and now a second wave. It continues the trend seen from last week with the Fed decision, the hawkish hike. The moves are not huge. Bigger moves perhaps seen against the Canadian dollar, which had its figures of its own, mixed. Worse than expected inflation, better than expected retail sales. This was the last big release of the year. We have more figures today, more figures tomorrow, and of course some figures next week, the week between Christmas and New Year's. I expect more consolidation, range trading, but there's always a chance of thin liquidity and crazy news happening that might move markets. But hopefully everything will be, well, the crazy news will not be some terrible tragedy.
Yeah.
And yeah, stronger dollar, slightly stronger dollar, bottom line. Yeah.
Yeah. Okay. You don't let me much to say, much to add.
Sorry.
Yeah. No, no problem. I'm kidding. Whatever. I would like to add to that is that, as you say, pretty limited movements because of market conditions, not because of the data not being enough for the green bug. If we take a look at the charts, we have 30 pips in the pound, 20 in the euro dollar, right? Usually 25 in the dollar to 20 cent. Usually this kind of reports or this kind of release move double or even more than what I have just mentioned. But well, it is what it is. And as you have just said, it's time for consolidation and with maybe one wild spike here and there out of a bloom. Keep that in mind, guys. Position adjustments or what orders that in another time of the year won't move a pip, these days can move a bunch. So beware of that, but mostly range consolidation and patience until early January, right?
Yeah, in
And
early
dollar
January.
strength.
Yeah, last
And,
January was very exciting. So
yeah, and dollar strength. Okay, thank you for being here, guys. Thank you, Yohay, as usual. Thanks, everyone, and Mauricio, who is working in the background. And have a happy holidays or a super start to the year. Okay, see you back soon.
yeah,
Bye
the other
bye.
side. Ciao. Bye bye.
Adeu.
Deu.